Welcome to Crescat's Market Call, featuring our macro and activist research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please refer to our important disclosures pages on the screen now. These can also be found in the description on Crescat's YouTube channel and on our website. Crescat's Market Call is about sharing timely macro and newsworthy geologic updates, both the positive and the negative news, across our holdings as they arise. These videos represent the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our activist strategy in creating new economic metal deposits in viable mining jurisdictions around the world. These securities discussed herein do not represent an entire portfolio and in the aggregate may only represent a small percentage of the strategy's holdings. The issuers discussed may or may not be held in Crescat's client portfolios at any given time. This video is not intended to be, nor should it be construed as an offer to sell or a solicitation of an offer to buy any security. If you enjoy our videos, please click on the like button and make sure you're subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to Merrick Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. So today we're going to start with Tavi because he has an appointment to get to, and we'll just then I'll go, and so go take it away, Tavi.
Appreciate it. Thank you, Kevin. Thanks everybody for watching again another show. Today was, as we were recording this, we learned about elections, and we don't know yet actually where the House is going to go. So just to keep in mind that we don't know that part of it, although probabilities in markets have been already applying some of those changes in asset prices. And I think that the biggest thing is how mixed, at least the action on Wednesday has been. We've had inflation expectations surged. We saw, tomorrow the Fed is at least has communicated and is also priced in that will likely cut rates by 25 basis points on the face of inflation reemerging. And the chart you're looking at the screen is the dollar, and I still think that this is probably one of the most important charts as of now and for the following months, really, as we see this critical juncture for the dollar itself. And remarkably, today was a day actually the dollar rallied quite significantly, but not in all parts. The DXY, which is more of a developed market index, did do very well. If you look at actually Brazilian real, which for no reason actually has rally today. So it was one of the largest divergences between, for instance, the Brazilian real and the euro that we've seen in the last few years. And so there was a big divergence in that front. Brazilian equities did very well today as well. And so you can kind of see how things are not very much, everything is mixed. How does the dollar appreciate so much with emerging markets, or I should say Brazilian equities doing well? And then we did see a major, probably the biggest move today as well was the steepening of the yield curve that we saw. And the markets also rallied quite a lot, completely ignoring some of those signs. And if we're seeing growth coming back and all those things, why did copper fall 5%? Everything seems all mixed, to be quite honest. I think the market is completely undecided of these trends. Now, I have an opinion. I do think that there's this potential for the dollar approaching a peak here relative to other currencies is quite high, and hence why I'm showing this chart. Anyways, let's go to the next chart. On the next chart now, this is completely apolitical view about the situation, but really thinking about what we are seeing in terms of the what I call the pro-growth fiscal spending percentage. So if you take the fiscal spending and you just exclude all the entitlements and net interest payments. And by the way, this is a very normal calculation. In emerging markets, politicians tend to follow very closely. In the US, for some reason, we just haven't talked about this since the 1940s. The 1940s, the whole thing about primary budget was a big discussion, and that was because the debt was really high. And I think we're going to go back to the same discussion of those times. But if you think about this chart right here, the pro-growth spending, what creates growth, it's very, supposedly very effective. Either infrastructure spending, green revolution, or hiring folks and all sorts of things that can create economic activity, is actually collapsing. And the main reason for that is because interest payments is creeping up and it keeps increasing. And that's because rates are too high. And so we're now at the lowest level of fiscal spending we've seen for pro-growth fiscal spending in over 40 years. It's actually more than that. This chart stops in 1980s, but we do know that for a fact that this, or I should say 1986, I think it's in the chart. This chart, is actually much longer than 40 years. It's a very significant decline in pro-growth spending right now. When you think about one thing, that I heard from very smart macro guys, they usually talk about a mix that tends to help the dollar. And that mix usually is aggressive fiscal spending plus tightening of monetary conditions. And what do we have today? We have the lowest pro-growth fiscal spending probably in as you can see here in the chart, over 40 years. I think that the delta for the spending is actually going to have to be reduced as well, and relative to other years. And at the same time, we have a Fed that is being forced to cut interest rates despite the fact that inflation is rising. And so this is, I don't think this is it's a very challenging picture for the dollar. And I love when people say that the dollar is the cleanest of all dirty shirts. But, when you think about how much we're spending in interest payment relative to GDP, no other country, name one country that is spending somewhere close to that. And there isn't one, because most major economies are in the kind of sub 2% level relative to GDP, where the US is approaching 5%. And so the urgency for cutting rates is much greater here in the US. Let's go to the next chart. And so on the next chart, it's a chart, maybe even Kevin might touch on this too. And I'm curious to hear his take on this. But the S&P 500, when you look at the aggregate CapEx and you log this chart, and you can kind of see that we go through trends. In the 90s, we did see the telecom bubble, which was driven by the technology bubble. And so we had a real build-up period. And then we did see the housing bubble as well, which caused a CapEx spending of a high degree. And then the shale revolution also did the same, as you can see in that chart. And today we're seeing something similar. Now, what I would argue is that today this is, yes, it's being driven as well by a lot of private spending, but fiscal spending is a huge side of this AI frenzy, in my view. And it's a big difference between the prior ones. But we are at this, top of the cycle when it comes to the CapEx. Another thing to kind of think about this as well is that despite the fact that CapEx cycle is at these levels, we're not seeing, the CapEx actually flow into the commodity sector at all. So natural resources are kind of in the other side of this spectrum as that you're looking at the screen. So I think it speaks to the potential rotation in markets that we can continue to see over the years, particularly in this coming decade. Coming out of these technology companies and coming back into natural resource companies. Let's go to the next chart. And so on the next chart, Buffett was all over the news over the weekend and announcing as well some of his cuts in terms of investments in companies like Apple, and of which carried a lot of attention. But I think that the biggest thing that he did, in my view, that should have been caught as attention was how much he's holding in cash equivalents, mostly T-bills, in fact. It is a large amount of money. We're talking approaching $350 billion. People used to say, well, this is not as high when you look at relative to total assets or even market cap of the company. But anyway you twist now, we're seeing, record levels of cash held by Buffett. And this is, I think is quite telling. I think is extremely concerned about valuations. I think that's probably one of the takeaways from this. And if anything, it's definitely a signal to be aware of in terms of where we are in the cycle of speculation overall. If an investor that is one of the most successful ones is holding these levels of cash, and maybe that should be noted for you as an investor as well. Anyways, let's go to the next chart. Today, we did see a decisive move of the 30-year versus 3-month yield. And so that actually flipped to positive again more decisively. Every time we've seen this was actually, as you can see in this chart, preceded recessions in a large way. Why is this time different? It's not necessarily my view, and I do, respect these types of signals. And I would also point out to another one that is happening today. With the surging markets, we've seen volatility actually shrink significantly. And on top of this, we also seen, the risk in markets being completely priced out. So how do you measure that? Well, you look at the risk-free rate versus how much corporations are in terms of receiving interest rates to borrow money. And you can see that on the junk bond ratings as well. And when you look at that spread in particular, it's the most suppressed we've seen, since the peak of the market in 2021, when we had that decline all the way to 2022. But also we did see something very similar as suppressed as we saw back in July of 2007. So I'm a little concerned about that risk being completely priced out in markets. It's usually not a good sign. Anyways, let's go to the next chart. Gold, on the other hand, had a big hit today, and I think carried a lot of attention. I don't think the thesis has changed at all. The imbalances that we were talking about, the pearl growth issue, and all of those things in terms of fiscal imbalances that we're facing globally and in the U.S. as well, have not changed. And so, despite the change of leadership in politics, and so, in my view, this is an important actual resistance that we're facing right now in the gold price. But ultimately, I think we go a lot higher, and ultimately, I think we break this resistance. And why do we break this resistance anyway? Or what's the case for it, to be put it differently? And I think the case is simply central banks, being forced to buy more gold, as we know they are facing a problem in terms of the stability of currencies overall. I don't think, if we look at the accumulation of gold so far, it still remains, and I always track this chart closely, remains sub 20% of total assets of central banks. In prior periods, we've seen this run up to levels like 75, 74% of central bank assets. Now, if we're going to go back to those levels, we've got long ways to go. And so I do think that that's ultimately the big side of the demand for gold moving forward. Ultimately, I think that this is an interesting setup. And so why I'm looking at this chart as well. Let's go to the next one. And this one, we're looking at inflation expectation. We had another jump today as well. This is a little older chart, but you can see the one-day change. This is prior to elections. And now with elections, we did see a breakout of inflation expectation. What concerns me here is that the Fed always talks about being data dependent, but are they really? I mean, if inflation is surging as we're seeing now, are they really going to change their tune and not reduce rates from here? And I highly doubt. And that's because there's something much bigger behind those justifications of why they're loosening monetary conditions. And when you lose monetary conditions in an environment that inflation is reemerging, it is scary. Especially if you've grown up in emerging markets with inflation highly embedded in the system. It concerns me a lot, and I think that we're still playing with fire when it comes to inflation. And it wouldn't surprise me at all if we see, a big reemergence of consumer prices overall, and forcing the Fed actually to be in a very difficult position where they're really not allowed to potentially raise rates or tighten monetary conditions, mostly because of where the debt imbalances are currently. And so, and on top of what fiscal stimulus is as well, and the deficits and all that. And so this is in my view, a big problem. Let's go to the next chart. Energy had a big move today. So if you looked at energy equities, they had a very significant move after elections, and basically given the fact that Trump will potentially allow these companies to drill even more. What is an unpopular take, however, is that production of oil is already surging to record levels. And so, nothing has changed in that front. However, energy companies have been consolidating for some time now. It's been of my view that this resilience in energy companies versus oil is quite significant. And we're probably at the beginning of that move, not at the end of one. And I highly doubt that as we see inflation potentially reemerging, that oil wouldn't participate on that either. So, I think that blue line and the catch up on the upside from the yellow line, as you can see in this chart, is more likely than the yellow line catch up to the downside with the blue line. And so to me, this is, a proof of resilience, basically, that investors are sticking with their allocations in energy companies that have leverage on the upside and the downside, despite the fact that oil prices have not necessarily gone up. And so, I'm still remain very bullish in energy overall. Let's go to the next chart. Leslie, well, today, I guess we had a big decline. This is a problem of these presentations, is that these charts sometimes are not perfectly updated. But recently we did see silver hitting, a 12-year high. And today we actually saw a decline of about 5% in silver prices. It is interesting that with silver prices declining 5%, we're back to what, $31 an ounce. This is it used to be a big number not too long ago, and we're getting used to that 3 handle now. And in my view, this is a new reality for the metal, and potentially much higher. Now, I think ultimately we're chasing those prior highs that we've had in 2011. And in the late 70s, early 80s as well. And so, this is a big, I think it's a big opportunity, and yet to show, the leverage, especially in assets that we hold that have that leverage as well to silver prices too, including, I shouldn't mention specific names, but we do run a fund with companies that have exposure to silver. Let's go to the next chart. TSX Venture is an interesting one because it has over a very large percentage of this index is in materials, and I believe that the median market cap is about 150 or sub 200 million market cap, which is kind of in this range of where actually we invest majority of our capital, and in terms of the size of companies, and smaller than those that number that I said. And so what is interesting here is technically this is forming a inverse head and shoulders. You can also draw a line and you'll see that we're very close to a major breakout in this chart as well. And so I do think that we're getting close to something that could actually create momentum, as we see capital potentially flowing into this industry. As we know, today gold prices were down 3%. GDX was down pretty much the same amount as gold, which is not usual. Usually, just like oil companies, as I was referring to, you would suspect that given the leverage that these companies have, they would be down a lot more. In fact, GDXJ was down less than GDX itself. In other words, the smaller names were actually outperforming the bigger names on a day that gold was down 3%. So all those things are proofs of resilience in behavior of market. And so in my view, it's this lag of the TSX Venture and the smaller cap names is just a function of the fact that we haven't seen the share prices of miners and the larger miners run up to levels that really entice them to start actually acquiring other businesses, because that's their currency ultimately. And so in my view, we're getting close to that. Anyways, let's go to the next chart. Leslie, I think this is my last chart. We're just looking at Brazilian equities, which did well today. Gerdau was up, about 12%. We saw some energy companies down a lot, up a lot. Sorry, I said up. Hopefully I didn't say down. But here is a link between industrial metals and Brazilian equities. And as you can see clearly, there's a link between the two. They're very tightly correlated, and in fact, there were times in the early 2000s or so, and mid 2000s, when the industrial metals actually had a run up that it was much quicker than the blue line, until the blue line actually started to catch up to those levels later on. And I think we're potentially at a similar situation. In fact, if you look at the peak of the correlation metric here between those two lines, actually peaked in 2011 at about, on the 12 rolling months, we did see close to 96 or 0.96 on the correlation between these two lines. Today, we're about 16. So that kind of proves this divergence is in my view, completely unsustainable, which suggests potentially that the blue line is really cheap. And so, or historically speaking, at least, and also relative to fundamentals. But we remain very bullish in the Brazilian equities too. Now, unfortunately, I'm going to have to run, so I'm going to pass it on to Kevin. I think this is my last slide. Can we prove that? There we go. Pass it on to Kevin. Thank you.
All right, thanks, Tavi. So just to follow up, because you were showing that chart of the TSX Venture Exchange composite index, and it was actually only down 27 basis points today. So both GDX and GDXJ were down substantially more. GDXJ, by the way, even though it's called the juniors, it's not really the juniors that we consider when we think of exploration-focused mining companies, and those are the real small caps and oftentimes the micro caps in the mining industry, in the market for gold and silver stocks. You find a lot of those exploration-focused companies. They're listed on the TSX Venture Exchange, and if they become successful enough, then they become part of. If they grow to greater than like 0.2% of the exchange, then they get put into the venture composite index. And so the composite index, is more the small caps, whereas the venture exchange is a whole is even more companies, even more explorers, even more micro caps. And frankly, that's where we see some of the biggest opportunity in the market today is exploration companies focused on big gold, silver, and copper discoveries in a microcap, in a microcap vehicle or a small cap vehicle. And where do you find those guys? You'll find them on the TSX Venture Exchange. Anyway, let's go on to my slides if we can. Thanks, Trevor. So the purpose of my presentation today is really going to be to illustrate the historic counter-cyclicality of gold mining stocks versus the broad U.S. stock market. We're going to do that over a variety of economic environments going back 100 years. And so, forgive me if this is going back too far, but we're going to start by looking at what happened in the Great Depression. We're going to consider the four largest bear markets for U.S. stocks over the last 100 years. So we're going to be looking at charts of, that cover 1929 to 1932, i.e. the Great Depression. We'll be looking at the 1970s, including that 73, 74, 50% bear market. We're going to be looking at the tech bust in 2000 to 2002. And we'll be looking at the global financial crisis in 2008 to 2009. But starting here, so what do we have going on here? This chart illustrates the potential value of investing in a large new gold discovery at a microcap price. Why? Because George Hearst, the father of William Randolph Hearst, and two of his partners bought the 10-acre Homestake mine in South Dakota for a mere $70,000. They incorporated that company into the Homestake Mining Company on November 5th of 1877. Homestake Mining became a public company in January of 1879, and it was the first mining stock listed on the New York Stock Exchange. The Homestake mine was the largest producing gold mine in the Western Hemisphere when it was operating. It produced over 40 million troy ounces of gold and continuously operated for 126 years. Homestake was acquired by Barrick Gold in 2001. But let's look at what's going on here, because because in the Great Depression, Homestake Mining was already at this point the largest gold mining company in the U.S. And at the peak of the Dow Jones before the great crash in October of 1929, the peak of the Dow was actually in September 3rd of 1929. And from that top to its low a few years later, July 8th, 1932, the Dow Jones would lose 89% of its value. But over that same exact time frame, September 3rd, 1929 to July 8th, 1932, Homestake stock price was up 49%. And if we continued throughout the decade of the 30s, at least before the 1937 recession, by February of 1936, Homestake shares had gained 580%. At the same time, the Dow Jones was still down 59% from that top on September 3rd, 1929. So this is one instance, even in a deflationary depression, where you can see that gold stocks, and in this case, this was the leading gold mining company of its day, but you can see how it outperformed stocks in a major stock market, in a major bear market. Let's go on to the next. So 1973-74 was a stagflationary kind of a recession. The decade of the 70s was an inflationary decade. But we started that decade with something called the Nifty 50 stock bubble, and it was a large cap growth and mega cap technology stock bubble. Not unlike the one we have today, not unlike the one at the peak of the market in 2000 as well, where you had super high PE multiples among a group of large cap growth stocks, and it included tech stocks back then too. It was IBM and Polaroid and Xerox, that companies that were the tech stocks of their day, and several others like them. But those large cap tech stocks would go down, and the entire S&P 500 index would come down as well. And here we see from January 10th, 1973 until October 3rd of 1974. This is weekly data. So on a weekly basis, the S&P 500 declined 48% over that roughly 2-year time frame, or less than 2 years. But at the same time, or even before that, really, starting at the end of 1972 is really when the Barron's Gold Mining Index bottomed out. It was in November of 1972, and it started to rise almost over the same time frame, and from November 72 to August of 74, as you can see here in this chart, it rose 376%. So over this time frame, you can see how gold stocks can rise even as the overvalued, especially overvalued markets for large cap stocks, the S&P is coming down. If we go on to the next, we can look at the entire period of the 1970s. Now, the Barron's Gold Mining Index, it's actually an average of kind of like the Dow Jones Industrial Average. It's an average of the stocks in the industry that the Barron's weekly news publication was reporting on and reporting the performance on, because prior to 1979, when the Philadelphia Gold and Silver Stock Index was launched, it was the only gold stock index that there was. And so Barron's still publishes this data. We've purchased it from them, and so we have it. And it is good, reliable data to look at how gold stocks perform in historic periods. So from 1969, from December 26th of 1969 to October 17th of 1980, the Barron's Gold Mining Index was up 1,247% versus a 43% increase over that entire roughly 11-year period. For the S&P 500, just up 43% versus 1,247. So, I mean, how can there be such a divergence? Well, this was a bull market decade for commodities. It was a bull market decade for commodity metals. And this is how precious metals mining stocks performed over that time period. Let's keep going here. Similarly, the tech bust in 2000 to 2002, actually from its peak on March 6th of 2000 to its low on September 30th of 2002, the tech-heavy NASDAQ composite fell 77%. And over that same period, the Philadelphia Gold and Silver Index was actually up 13%. So when you really look at the worst of what happened in the tech bust, which really the tech bust got going in 2001 to the downside, as you can see in that blue line, the Philadelphia Gold and Silver Index, also known as the XAU Index, it rose 393% from November 13th of 2000, when it had bottomed out, to its peak on March 10th of 2008. Over that time period, the XAU Index rose 393%. Well, over that same time period, the NASDAQ composite was down 27%. Okay, so why do we look at the NASDAQ composite? Well, it was a broad market index, and it was a tech-heavy index. Factor in the roaring, 1990s and the tech bubble in 2000. That was the index that people followed for tech stocks. And so let's keep going here. Let's go on to the next. So when we step back now and we look, we look even further, and now we're looking at the TSX Venture Composite Index. Is our yellow line, our line for gold stocks, and we're looking at it, really over a time period since the, since this index started, since its inception date. The TSXV inception date was on December 10th of 2001. So kind of as that tech bust had already gotten going in 2001, that's when this thing was launched. And from that launch date until its peak in 2007, on November 6th of 2007, the TSXV composite index rose 440%. 440% versus a 31% increase in the S&P 500. And then what happened? And then we had the global financial crisis, 2008 and 2009. And it did give it all back. But the global financial crisis was an extraordinary economic event. Just 2 years later, the TSXV rose from, coming out of the GFC. It started its rise on December 5th of 2008. And from December 5th of 2008 to March 4th of 2011, it was up 376% versus 51% for the S&P 500. So you can see over that entire, over that entire time period, S&P was up substantially versus the TSX Venture Composite Index, which is the proxy for exploration mining stocks, was up substantially versus the S&P 500. But what's been happening since then? We've been through a 14-year bear market. and potential basing pattern, like Tavi was showing, that inverse head and shoulders, which you can see here too, for the TSXV index, which is down 83% since that intermediate top on March 4th of 2011. Exploration mining stocks have been through a historic 14-year bear market and basing pattern, and that's through the end of last month, through 10/31 of 2024. Meanwhile, the S&P 500 over that same time period has surged 332%. So here we go again, a divergence, the counter cyclicality of gold mining stocks versus the S&P 500. But what's the setup today? Well, the setup today is we have, guess what? The TSX Venture Composite Index, the explorers are trading at a level that's below their low of the 2008 global financial crisis. And on an inflation-adjusted basis, as we're going to show in our letter that's coming out here in another day or two, it's down almost about 45% lower than its low of the global financial crisis. Now, I know not everyone, but many people, many investors in mining stocks are scared to death that we're going to go through another 2008 type of a period where we have a massive sell-off in gold mining stocks. In my view, the probability of a massive sell-off like that is extraordinarily low. Why? Because that only happened after a 440% run-up over 5 years. And today we're trading it at substantially more depressed levels than we were at the low of the global financial crisis. Meanwhile, as we're going to show here coming up, we have extraordinarily a high divergence and overvaluation for the S&P 500. Let's go on to the next. So, people ask me all the time, especially our clients, what's going on, Kevin? How come gold and silver and some of the bigger gold mining stocks are starting to move up, but some of the explorers are still lagging here? And here we're looking at it. We're looking at the period from that launch. We're looking at the period from December 5th of 2008, which was the low for the TSXV in the global financial crisis. And notice how when coming out of the GFC, notice how the explorers, the teal line here, were outperforming. They were outperforming, versus spot gold, versus spot silver, for most of that time, versus silver and versus the Philadelphia Stock Exchange gold and silver index. What's the Philly Exchange? The Philly Exchange is the large cap gold mining stocks, kind of like the GDX. But look at this again, looking at the long bear market and base that's been forming. Look at this big rounded base. This is a technician's dream, a technical setup. But it's the catch-up opportunity from what we believe are deeply undervalued levels for the explorers, like we showed in our last presentation, especially the ones that we own, because we own some of the best. The opportunity to catch up and to outperform the GDX and the GDXJ and certainly the S&P 500, in our view, is just tremendous today. We say the lag is your friend. Why? Because we've already seen the gold and silver and the larger stocks lead. What is naturally likely to follow? Well, it's the smaller and microcap stocks. It's the explorers. And when the money flows into this industry, as we believe it is starting to, we believe it will flow down to the explorers. We also believe there's a big M&A cycle coming, like we've talked about in other episodes. I'm not going to dwell on that now. Let's keep going here. So what's the other side of the equation? I mean, the other side of the equation is that we are still at record, what we believe are record valuation levels for large cap stocks and mega cap growth stocks and the S&P 500 at large. And that's why we've been calling for this great rotation, the move out of these large cap stocks and into the undervalued smaller cap stocks and commodity stocks. We actually saw a taste of small cap stocks with the Trump victory last night. You saw small cap stocks decisively outperforming large cap stocks when we look at like the Russell 2000 versus the S&P 500. And we saw, like I showed, we saw that the TSXV index of small and micro cap explorers was barely down, like 27 basis points on a day when gold and silver were down, and on a day when the larger cap gold stocks were down significantly. The real junior companies outperformed. Is the whole idea about Trump I thought Trump was going to, people will say, well, I thought Trump, if he gets elected, we're more likely to have more inflation. So what's going on? Why did gold stock sell off today? Tavi addressed some of that. But really, it's, the bottom line is because of it is true that, most of your strategists out there will say that Trump, is likely to be more inflationary for the U.S. economy. But so how did that translate today? Well, how it translated today was long bond yields were going up and inflation expectations were going up for sure. Why did gold go down? It went down because bond yields were going up. And with bond yields going up, the dollar was going up. And with the dollar going up and bond yields going up, gold came down. It's like a temporary one-day mixed signal kind of a thing, because overall, we think inflation is going to be very bullish for gold prices, over the next several years. And overall, like Tavi's shown, we have the setup for that rising inflation with the fiscal imbalances. And what's going to happen when there's pressure on the Fed to keep rates down? The Fed's coming out tomorrow and they're likely to reduce rates. So, the narrative could change in like one day. We'll see, because you'll be watching this Friday. We're recording this Wednesday. What we're looking at here, I've shown this chart before. We've updated it recently. We're looking at the valuations of the top 10 mega cap stocks compared to the peak of the tech bubble in the top 10 stocks. Then, most recently when I updated this chart, we were at 63.8% at combined enterprise value to GDP. That's versus 28.4% at the peak of the tech bubble on March 27th of 2000. We're more than twice as richly valued for the top 10 mega cap stocks. I'm sorry, guys. I've called it. I've been saying it's a bubble for a long time. I'm still saying it's a bubble. It is a bubble, and I'll show you more reasons why we think it's a bubble. Let's go on to the next. Now we're looking at Shiller cyclically adjusted PE ratios or CAPE ratios for the whole S&P 500. Robert Shiller, he got a Nobel Prize for this stuff, for his analytics of market cycles over long time periods and valuation measures. Does valuation matter? We think it matters. A lot of the world right now doesn't think it matters. And that's why we have these record valuations. But on a CAPE ratio basis, we are, using Robert Shiller's methodology. He's saying the market PE, when you adjust for the cyclicality, is actually at 36 times earnings today for the whole S&P 500. And that's a higher level than the 33 CAPE ratio that we had at the peak of the stock market in 1929, September of 1929. So now you look at this chart and you'll say, but Kevin, the CAPE ratio was higher during the tech bubble. Didn't you just show me something that showed that we're twice as high on EV to GDP valuation as we were at the peak of the tech bubble? How come the Shiller CAPE ratio says it was even higher then at 44? There's a way to kind of another way to look at cyclically adjusted PE ratios. So let's go on to the next. That can help answer this dilemma. And that's when we do margin adjusted PE ratios, because we're at record profit margins for the S&P. And guys like Schiller and John Hussman, who's a PhD from Stanford and a money manager, John Hussman developed this margin adjusted, this Schiller-like cyclical adjusted PE ratio, but he uses profit margins to adjust for the cyclicality over long time periods. And instead of an arbitrary 10-year window like Schiller looks at, he can look at even longer time frames because over a very long time frame, we can see that corporate profit margins are highly cyclical. They go up, they go down. And today we're at record high profit margins. So when you stack high PE ratios on top of record high profit margins, you actually have even higher valuations. But if you take the average profit margin over time and use that to stack your PE on top of, you get these margin adjusted PE ratios. And so what's it showing here now, going back 33 years and averaging out the margins over that time frame, we are actually at higher PE levels than we were at the 2000 tech bubble. And that's when the MAPE and the CAPE ratios actually peaked out in 1999 before the tech bust from 2000 to 2002. So here we have another way of seeing. So we've looked at a number of ways where we can see that valuations are arguably higher than both 1929 and the tech bubble in 2000. This is the risk. This is the valuation risk. But this is also the setup. It's the setup for the great rotation. It's the setup for the rotation out of these overvalued large cap names. And if we get a big bear market correction, like we typically do eventually from valuation levels like this, like we've seen historically, it's also the setup for the counter cyclicality of the gold mining stocks to take in, especially starting from today with such depressed levels that we have, like we have just shown. I don't think I have too much more here. Do I, Trevor? That's it. So we're going to shift now to digging into in depth to our activist mining stocks. Take it away, Quinton.
Thank you, Kevin. All right. Look, we do record these videos, and like Kevin and Tavi have both indicated, because there's a 2-day lag between when this recording is done and when the video airs, it might mean that we omit some information. We can't reverse time. So if there are news releases that come out, say in the next 48 hours that are important, they won't be in my segment here, but I'll try to address them in the next video. All right. Now, traditionally, I've introduced companies, like as we take investments in new companies, and I usually kind of highlight those companies up front. Like in the videos, I would talk about an investment, say in a brand new company, and I would explain the thesis behind their exploration, meaning what kind of target they're trying to test, what kind of data they need to gather to develop the drill targets, or what kind of drill targets they have in hand already. And then I would talk about, the anticipation of what would come over the next few months, say, as they undertook work. And we do work with our companies in a very focused way. We like to understand fully what they plan to do. And we like to, be party to discussions around that. So we don't just hand people a check. We actually work with them. We talk with them about how the money's going to be spent. And we try to get it, on a very tight and narrow track so that it delivers the best outcome for the company. Now, traditionally, I usually give those companies up front. Okay, but today I've stuck the mystery company in the middle of the updates. Okay, so you're going to have to watch the whole thing to figure out which company it is, but I'm going to plow into things. So one of these things is not like the others. You'll have to figure out which one it is. Let's go to the next slide. All right, Sitka, one of our more recent investments, we'll say, we jumped into Sitka about a year ago, something like that, when they started in some higher grade at their RC project in the Yukon. And this is a reduced intrusive type system. I've spoken about Sitka a few times now, and I've talked about the work they're doing, that's demonstrating that there is what appears to be a relatively high grade reduced intrusive type gold system on the RC property. And it looks like it could be a big one. It's prolific. There's a lot of components to it. In other words, there's a lot of targets really for them to test. And they do a good job of providing routine updates. They did put out an update at the end of October. You can see here, they got some very high grade samples at surface, but they also identified some VG in some of the drill holes they've recently completed, particularly at this Pulkaman target, which is one of many targets across the property. But Pulkaman is an intrusion that is on the Clear Creek part of the ground, which is the block that they bought from Victoria Gold before Victoria unfortunately met its demise a few months ago. So this is new. It's exciting. It's a new target. It's first aggressive drilling on that target. You can see the highlights here listed. This is looking very exciting. And they're also doing a lot of basic work in terms of soil sampling and stuff like that. So let's go through some of this data. Let's go to the next slide. Okay, now first of all, this image simply shows the layout of the west side of the RC project. The project actually extends off to the east, so to the right of the image. But this area is kind of the core where they're exploring right now. So what you see here are various little pink blobs. They're kind of hidden in the background there, but those pink blobs are different intrusions, different stalks, we call them, which are basically magmatic intrusions that have come up through the crust. And this Pulkaman stock, which is kind of up in the, just slight to the upper right of center, that is the focus of some of their most recent work. You can see two purple blocks there. Those purple blocks are basically where the company undertook more detailed soil sampling, and that's to bridge that gap between the ground they picked up in Victoria, which is to the south, and the ground that they already held, which was to the north. All right, so now we have a better picture of what's going on in there. So let's talk about the data that they announced here this week. Let's go to the next slide. You can see here the soil results, and notice that there's two sets of data here that you're looking at. Okay, the older existing gold in soil data is shown in kind of uniform colors, like we'll call it, solid pastel colors in the background there. Okay, and you can see there's great gold anomalism around Blackjack and Eiger, and then also down there Pulkaman. But there was data lacking towards the west. So what they did is they basically came in and they infilled that area in the west. And you can see the soils are generating extensions of those known gold anomalies off in that direction. So, this really shows the footprint of the gold system here is much, much larger. Now, the scale bar down in the lower right is what I want you to focus on. Whenever you look at a geologic map, focus on the scale of the thing that the company is presenting, because that gives you a sense of the potential prize here. And if you look at that, like if you take that scale bar, put it in your brain cells, and then kind of mentally transpose it upwards, Pulkaman, which is in this case, it's just slightly downward and to the right of center. That Pulkaman intrusion, that Pulkaman stock, that thing's about 1.5 kilometers east-west. That is a huge, huge gold anomaly. And the values in it are quite robust. We're talking hundreds of ppb, even up to gram plus in soils. Right. And now it's well defined. Okay. Now the company did put a couple holes in there. We're going to talk about that too. Go to the next slide. You're able to go. There we go. So they put two relatively deep holes. There were some historic holes drilled here years ago. All right. So the project, the area has seen historic drilling, and the historic numbers are labeled there at the top. I can barely read the darn things, but there's 10 meters of a gram in one of the short holes near the collar of the two holes that they completed in the middle. And then there's two holes over here on the right-hand side, one of which hit, I think, 70 some odd meters of 0.72 gram. And interesting values, not super high grade, but that's out in the Hornfels. It's out into the country rock on the side of the intrusion, the green. And that's a good result nonetheless. Okay, so there's a lot of gold here. Now, the company drilled 2 relatively deep holes. These are like 300 or 400-meter holes, and they're shown in the center of the image. And they did see visible gold in one instance in each location. Okay, so they're already telling us, hey, we drilled these holes and we're seeing the right kind of veining, the right kind of geology that's conducive for these reduced intrusive systems, these sheeted quartz veins. All right, so let's look at some more. Go to the next slide. All right, this image, there's 2 images here really. At the top, those are the particles of visible gold that they saw in core, and that's one from each of the 2 holes. So hole number 73 and hole number 74, each of them had visible gold present. The bright yellow, of course, is gold. The kind of more light brassy looking stuff, that's mainly pyrite. Maybe also some arsenic pyrite and pyrrhotite as well. And there's also bismuthinite, which is a very diagnostic mineral in these reduced intrusions. I think the bismuthinite is the gray stuff, particularly on the left side there, that darker stuff. All right, so that's the right kind of stuff. That's what we're looking for. All right, now the core down here at the bottom, it's a little bit hard to see the images. You can go to the news release and look at them yourselves. But what really intrigued me is that the intrusive rock that they're finding hosts this mineralization is basically the same texture and appearance as what we see in holes up north, up at the Blackjack area. Okay, and that's several kilometers away. So we're looking at basically intrusive rock that's probably sourced from the same magma down at depth, and it's generating similar gold mineralization. All right, it leaves a lot to the imagination. What might be between those? I don't know, but I've tried to suggest several times, the way to think of this is like a cow that's tipped upside down, and basically you have, the udders, you basically have little stalks coming off, and that the mothership is down there below. And I still feel very strongly that that's the case. Otherwise, why would you see the same magma generating, each intrusive here? They're all connected, right? And then the other thing I'd point out is that in those core photos, you see numerous little hairline quartz veinlets. And those are those little white lines that kind of form zebra stripes going across there. That's very important. Okay, that is a good indication to us, the reader, that there is veining. There's good veining, which could host gold. Right? You don't have to see visible gold in every single one, by the way. Just a little bit goes a long way. So I think that's very encouraging. Now, they do talk about these Lamprophire dikes. Everybody's saying, what the heck is a Lamprophire dike? Look, Lamprophire is also an intrusive rock, okay? And it usually taps magmas that are way down deep in the ground, like even way deeper than the magmas that generated these intrusions. Now, you might say, well, why is that important? Well, Lamprophires are noted, and this is just an observation by geologists around the world. They're often noted around big gold deposits, okay? And the thesis is this, is that when you form a big gold deposit, usually you have to have a place in the crust where there's a lot of broken rock, a lot of faults and stuff have moved the crust around. Well, those are zones of weakness. And because they're through going faults and stuff that can go way down deep in the ground, those faults can actually tap melts out of the mantle, all right? And that's why we see Lamprophires quite often extending, cross-cutting upwards from deep in the mantle that are coincident with gold deposits, because the 2 events are basically depending on the same kind of, overall, we need heat flow, we need fluids, we need, et cetera, et cetera, et cetera. And they're all kind of following the same geologic pathway, if you will. So seeing Lamprophires, usually ticks a box in my book. That's usually a good sign. They make a little bit more of it in the news release than maybe is necessary. Most retail investors are like, I don't know, don't care. But for what it's worth, that is a very encouraging sign. Okay, let's go to the next slide. And then they had some images taken at surface. They did surface work, and these are images of that same very distinctive intrusive rock. Notice that very distinct crystalline, porphyritic crystalline texture. And look at those quartz veins. It's boom, 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 one after another. Each one of those veins is potential host to gold. Okay, so that's important. To see veins like that, that's a really good sign. So this Pulkaman stock it looks like a winner. And that sample over there on the right-hand side is actually the one that they yanked the 67.9 gram per ton gold out of. Okay, so those veins, it's a little hard to see because the sunlight's kind of low angle. I reckon this is taken late in the fall, when the sunlight gets low angle like that. Not real great lighting, but anyway, you can see that the veining has very pronounced, arsenopyrite and pyrite, which is that dark stuff going through there. And it's got good gold, 67.9. So this is a system, again, another stock that's demonstrating it can generate high grades. And that's great because that's what you need in these reduced intrusive systems. I think the first two holes, the assays come back here in the next few weeks. It should give us a flavor for what to expect, in the upcoming drilling. All right, so this is a good update, solid news. Everything's positive. Let's go to the next slide. Okay, Yukon Metals put out some news. They did a little bit of geophysics. They did prospect. I think I mentioned maybe last time we did a video that Yukon they raised money in the spring and they were very conservative how they spent it. Okay, they did get out and do work on a couple of their targets or main targets that they want to pursue first. And one of them is this Star River property position. Okay, this is in the Yukon. And they announced very good results, surface rock chip samples from across the Star River property. And they decided to do what's called an IP survey. It's basically an electrical survey to try to look at the properties of the rocks in the southern part of the block. So over here on the left-hand side, those bright colors are actually telling us a little bit about the intensity of the electromagnetic response from that survey. Okay, and you can see we've got this is EM response. So this is basically looking at conductivity, and we have some very distinct blobs in pink there that indicate or suggest there's probably sulfide accumulations at depth. That's a good sign. Now they're starting to see what could be definable drill targets emerge from this data. So good first step. Is it a home run yet? No, it's going to have to be drilled. Are they going to drill it this year? No, it's winter. It'll be next year. But we got starting to see drill targets pop up. Let's go to the next slide. Okay, Electrum. Look, this is in Serbia. This is a company that is quite interesting. It's very off the radar for the most part. It is a Canadian traded company. Remember, one of these things is not like the others. Okay. They put out some news this week announcing discovery and entrenching. This is channel sampling, trench sampling at this Bambino target in Timok East of 0.43% copper over 133.5 meters. Pretty good result. It's really encouraging. And what I think is really encouraging about this is that this is really the first hardcore data, hard rock data that they have. They do have soils and stuff. Talk more about that in a minute. But I'm going to talk to you about the target that this might be indicating is present. All right, so the highlight, the notes over here, they really tell you a little bit about what they're trying to accomplish here. They do see a very robust copper target here. There is gold with it too. They mentioned that a little bit further down. This is a copper gold target of a very special type, and in this case, it resembles very strongly a discovery that was made a few years ago by another Canadian junior company not far from this location. So I'm going to really focus on why I think this is a high value target in this company, which we have taken an interest in here recently. Might have exceptional potential. Okay, this is a kind of story we like, swing for the fence kind of potential. Let's go to the next slide. All right, so the Timok magmatic complex is located in Serbia. It's actually, so this is Southeast Europe. People are going to go run for their map and try to find where the heck Serbia is. Southeast Europe. Okay, so this, go from Italy, go across Adriatic, you go to the ocean or across the sea to Southeast Europe. Serbia is boom right there. And in Serbia, there's this very robust, very prolific copper gold district called Timok. Okay, and this Bor district is the other name. Timok is a belt of rock. in which numerous porphyries came up. These things are a few tens of millions of years old, but there's a distinct flavor of copper gold porphyry across this belt. And some of the biggest deposits really of copper gold in Europe have been found in this location. The Bohr mine, for example, BOR, that is a long-lived mine. It's been around for ages. It was mined during the communist period, and it today produces a huge amount of metal. Now, Zijin bought a lot of the projects in this area. They bought a lot of the mines in this area. So they basically operate everything that you see, with the exception of those two over there, the Timok Gold and Kokorikita, that belong to Dundee. Everything else belongs to Zijin. But our friends here at Elementum managed to pick up a little block of ground due east of that belt. Okay, now you might say, well, that's a belt. Why did they pick up the ground to the east? Well, they did some really good boots on the ground work, and they recognized that there's good potential over there, and I'll talk more about that in a minute. But you can see the history here, okay? The thing I want you to focus on this slide, and you can read it on YouTube during the weekend. Look at the dollar value of, basically value creation through discovery that's been done here. Reservoir Minerals found this Kukari-Peki deposit. I think it was in 2012, or if I remember, I think it was July, and I did own a few shares, got lucky in that one. Anyway, they found just an absolutely amazing deposit. Stock went crazy. Okay, then they were acquired by Nevsun, and then you can see how it transpired. Dundee's acquired Avila, and Zijin then stepped in, and boom, boom, boom. You read that. Look at the final amount of value, an investment now that Zijin is pouring into this district. This is a major copper gold district. The Chinese recognized it early, and we have the fortunate, opportunity here to invest in what could be a major discovery that could add to this district. So let's go to the next slide. Okay, this slide was taken from a YouTube video. It took me a little while to track it down, but it's Reservoir Minerals. It's from 2013. It's a YouTube video. You can see the link up there at the top. And if you go forward to the 4-minute and 50-second mark, you can see a geologic cross-section of the wonderful discovery that Reservoir found. This is this Kukari-Peki deposit that was discovered. Now, what's that kind of big gooseneck looking thing that's coming out of the ground? You see dark orange down there at the bottom, and then it kind of morphs into pink and also red. That is basically a porphyry at depth that was found, very large tonnage, a lot of copper down there, copper and gold. And then it morphs up into a high sulfidation, basically we'll call it an epithermal type deposit as you get shallower and shallower. And that was super high grade. That was just an amazing high grade discovery. It was one of the most remarkable discoveries during that very dark period, when gold was falling like a rock and everybody is giving up on junior mining. This was an exceptional story that ended up making a lot of people a lot of money. All right, now notice that the porphyry itself and all of those rocks that host the mineralization are buried underneath some strata that are green and yellow there. Okay, so it was a blind discovery. There's stuff deposited on top that concealed all of that geology underneath. All right, that's important. Okay, remember that. Go to the next slide. Okay, so this is a layout of all of the deposits. I won't go through them all. I'll just point out the lay of the land here for the Timok district, the Timok and Bohr district. And then notice over here, Timok East, that little red circle over there on the right-hand side. That's the one we're going to focus on. That's this Bambino anomaly that was identified. And notice it's similar in scale. Like if you look at that little anomaly in context of some of the other deposits around here, it's got a similar kind of scale to it. It's very intriguing. Now, it's not right on strike. And geologists get stuck in a rut sometimes. They think, all the deposits have to kind of line up like this. Well, no, they don't. So, sometimes you find stuff, you think outside the box and you find stuff. And these guys have done just that. They found a very robust anomaly off to the east there. So let's go to the next slide and look at it closer. There we go. Okay, so here's the Bambino anomaly. So we're zooming right in on that anomaly itself. And you have two images here. One's for copper. I think the one on the left is gold. Boy, that's tiny. It's hard to read. Sorry. Apologize. You'll have to put it in the deck. I think it's gold on the left and copper on the right. And then you can see some of the rocks that they found at surface down there in the bottom right. Those are just beautiful stockwork vein rock with gossiness, the dark brown, that's oxidized and sulfide. And then the bright blues and greens, that's copper of various forms. Okay, so various copper oxides. All right, so we have literally mineralization sticking out of the ground that they can put their hand on. They've now put a trench across that, and that is what yielded that 133 meters of 0.4 something % copper I talked about at the beginning. Okay, so we know there's something there. Okay, now what I want to get you to focus on, think of the geometry of that previous slide I had on reservoir with that gooseneck coming up and kind of, just barely touching the old paleo surface there. Imagine a gooseneck like that hiding underneath this, okay? These guys are going to go out there and drill this soon. And I'm hoping to heck that they poke a hole right in that this beautiful bullseye robust anomaly that we see here. And that basically one of those really high grade, goosenecks is sticking up from underneath the ground here. I think that's possible. I think this target looks like that. Geology kind of suggests we're in that environment, and with a little luck, maybe they get lucky here and they find a very repeat reservoir. They find a very robust new copper gold deposit. Okay, so that's what we like. That's where we're putting our money. Go to the next slide. And you can see this is simply that same Bambino area. It's got multiple color circles. You say, what on earth is all that? Well, those are many, many different elements all stacked on top of each other. But you can see that just one element after another highlights that really robust target area. Okay, so why is that important? Well, elements like bismuth up there in the top left, you can see copper, arsenic, bismuth is Bi, and then antimony, tellurium, Te. Bismuth, tellurium, and tungsten, they don't move very far. Okay, in other words, they're going to be like more or less right on top of a porphyry or closely associated spatially with a likely discovery. Okay, so when I see elevated concentrations of those elements like right in your target area, that gets me excited. I think that this is a very strong target. We're very anxious to see them drill it. I think they'll be drilling it shortly, and it could be just one of those things you wake up one day and find out they found something really incredible. Okay, go to the next slide. I think I might have one more. Yes. All right, this is the geologic map. This is where the layered rocks that I talked about are important. Now, notice over here on the left, you got a geology map of the area. This is of the Timok region. And notice the pale green color on the left-hand side. That's that sheeted rock that I showed you in the cross-section in one of the previous images. Okay, that area, Timok, is actually covered. Believe it or not, it's almost fully covered. Like you can't see the actual outcrop of you have to drill through that green stuff to get down to the rocks that have the stuff in. But over here on Timok East, lo and behold, that belt where you see the darker greens and kind of brownish green and pinks and stuff, that is rock that's actually exposed. That is your host rock. Like it's sitting right there. Okay, so these guys, good on them. They went out and they started driving around and prospecting, and they noticed an area where there was basically no vegetation growing because the acid in the soil was so strong from this mineralization. They call it a kill zone is what they call it. Okay, and they were able to stake and acquire that property, Timok East, and right there. Now they have a beautiful target. By the way, there are some broad-spaced soil lines further up to the north and even to the northeast that also have really good mineralization. They need to do more infill in those. I think they actually have more targets on this property, and we'll see that evolve over time. But in the meantime, they're going to drill that target right there. I think it's beautiful. Let's go to the next slide. Okay, Red Canyon put out some news this week. They're drilling their Kendall property. This is up at Terrace or near Terrace, BC. All right, so this is, it is not the traditional porphyry copper belt in BC. Okay, that's further to the east. This is what I really think, I strongly feel, is a newly recognized, or we'll call it becoming more recognized porphyry belt that extends along the North American Cordillera. And it extends it, guys. The reason I get excited about this is it extends all the way from Mexico up through Arizona, up through western U.S., all the way up into BC now. Now they're confirming there are, what we call likely Cretaceous age porphyries along this belt, and it goes all the way up into Alaska. And guess what? Pebble, for example, is one of these. Okay, so could there be big deposits along this kind of emerging belt? I think so. Like Brixton, they found Camp Creek. That's an example. There's actually quite a few world-class porphyry belt deposits. Butte, Montana would be one too. Okay, so I'd like to think about new ideas, and this is a new revolutionary idea in my view, that there's a porphyry belt that's basically hiding in plain sight in British Columbia. That's part of a broader belt that we in the U.S. recognize already. But now they're starting to see it in BC, and they're getting pretty excited. And this Kendall occurrence, this is the first drill program on this target, first maiden drill program ever drilled. Hole number 1 hit a long run, about 600 meters of 0.1% copper. You say, well, big deal, that's not ore. It's the first hole, okay? To hit on your first hole, that thing, it usually takes 20, 25 holes to find a deposit, okay? But on the first hole, they're already seeing a big long run of 0.1% copper. Look, somewhere near this, okay, somewhere nearby, you could get into the mothership part of this where the grades are better, okay? And, once they do, if they do, presuming they find that kind of thing, that could be a very significant discovery, all right? So I think this is in terms of geology, is very close. It's not a swing and a miss. It's more of a foul ball, but not too far off. Like, we're getting there. And this is the first hole, for Pete's sakes. All right. Inside of it, they hit 123 meters of 0.16% copper equivalent. All right, go to the next slide. Now, I love this company because they put out lots of detail in there. Like, it's geology rich. Okay. And most retail investors are going to go, oh my God, this is a dry read. But okay, here's the takeaways. I'll just kind of highlight the things I think are important. All right. First of all, you can see the anomaly, the alteration in geophysical anomaly that's designated there, 2 kilometers across, so a bit more than 2 kilometers across. That's a big alteration cell. Okay, so that says there's a big porphyry potentially hiding here. And then the little weird polygon they have in the middle there, that outlines the footprint of where they did the drilling this year. In other words, inside that polygon are where they poked all the holes. And they only had 3 drill pads. Okay, so they basically went on, they put 3 pads on and drilled holes, boom, 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 in that box. Is that the entire target? No, there's a lot more. Let's look at it in the next slide. Okay, the image over here on the right, the left-hand side are the traces of those drill holes. So you can see, again, 3 drill pads, and 2 of the pads have 2 holes. One of the pad has 1 hole, right? Each one of the holes is shown in a little yellow trace there, but they go down in the ground. So we're looking at a plan view of the thing, right? But over here on the right, we're looking at a cross-sectional view of hole number 1. So you can look at hole number 1 and then come over here to the right and say, okay, now I can see what's going on. Look at this hole. Everything from top to bottom was in mineralization. And there was a bit higher grade stretch about 2/3 of the way down that hole. That's a near miss, guys. There could be something very easily hiding in here. Now, to put it in perspective, a little cube of rock, we'll call it, let's do some math. Okay, so rock like this, a porphyry, density 2.7, something like that. Okay, 2.7 tons per cubic meter. If you have a kilometer by kilometer by kilometer block, that's 1 billion cubic meters, all right? 1,000 times 1,000 times 1,000 is 1 billion. Well, that's 2.7 billion tons. Now, I'm not saying there's 2.7 billion tons here. What I'm saying is the size of the target. Remember, I told you earlier, think about scale. Whenever you look at news releases, focus on that scale bar. We want to find, say, 300 million tons, 400 million tons, something like that, 500 million, I don't know, something like that, okay? Well, that's quite a bit smaller than the cubic kilometer, okay? So could you fit on that image a nice big porphyry deposit? Absolutely. There's plenty of room here. And this is telling us it looks like they're near something. Okay, what else tells us they're near something? Go to the next slide. They love putting imagery in their news releases. In fact, they have links to all the drill holes. You can go through and you can sit there all weekend and click, and you can look at photos. Okay, now what are we looking at here? Look, these are pieces of core from that hole number 1 that include veins. Okay, in that top rung there, you can see a nice, beautiful quartz vein with a lot of pyrite, which is PY, and chalcopyrite, CPY. Chalcopyrite, it's a copper mineral. Okay, so there's a lot of copper in there. That tells us, man, there's something kicking off copper down there somewhere. Okay, so that's really robust looking. Over here in the second run, you can see, 2 images. You can see a lot of stockwork quartz veining. They're what we call B veins. Bit technical, but basically they are veins that are directly associated with the degassing, the overpressurization of a porphyry. And what they do is they basically pop open the earth and flood it with little tiny veinlets all over. Okay, so are these ore? No, they're low grade. They have 0.1% copper. But, trace this down dip or off somewhere, to the left or right or up north or south or whatever, there could be very high grade copper. We can see that from the top image. Okay, so patience, comes to those, reward. Those who are patient are rewarded, usually in this business. I'm going to be patient. I'm going to watch this story very closely. They have 4 holes left for assay. You can go and look at the photos for the other 5 or 4 holes that they have yet to announce. So get on there, look at their website, study it yourself. Go to the next slide. Okay, we have Western Alaska announced the remaining assays from their drill program in 2024. They drilled a pretty broad number, or pretty broad area, and widely dispersed holes in several targets across that area to try to link up the northeast end of their CRD system at Water Pump Creek with the southwest end at Illinois Creek. Okay, and that's a 6-kilometer distance. So they basically tested areas in between these two over a 6-kilometer strike, and they hit a lot of smoke. Did they hit any home run? No. They don't have tens of meters of high grade silver, lead, zinc, and such. But what do they have? They've got a lot of intercepts. You can see them listed here, highlighted here towards the bottom, where there's significant values of silver and often lead and zinc, or even gold in many drill holes. Okay, these, in my view, are simply leakage features that are probably coming off of larger bodies of mineralization. And I do think that if the company is persistent and they continue to drill test this thing, I think they'll latch on to the bigger sulfide bodies, and we'll see that Water Pump Creek style mineralization pop up, and we could find a very large tonnage target in here. Remember, Water Pump Creek already has a resource. I think it's 70-odd million ounce, 75 million ounce silver equivalent, very high grade, nearly a kilogram silver equivalent per ton. There is likely a bigger tonnage target on this property, and the company it's at least seeing the telltale signs through these drill intercepts that there's something lurking around. So let's look at where these are. Let's go to the next slide and look at the extent of these drill holes across the property. Go to the next slide there, Trevor. Thank you. Okay, so Water Pump Creek is up in the upper right, and then Illinois Creek is down here in the lower left. There's 6 kilometers between the two. And you can see the areas that they targeted, this Warm Springs and this WPC South and so forth. These are the areas that they sprinkled a few drill holes, and they hit mineralization in each case. I think that's very encouraging. And there's some more work they did was a trenching program, and I want to talk about that briefly. It's in that area, kind of almost halfway between Illinois Creek and Water Pump Creek. Let's focus on that area now. Let's go to the next slide. Okay, so this is Water Pump Creek South. That's that area halfway between the two. And you can see they through shallow drilling and trenching, they actually have found footprints of mineralization starting to take shape in the subsurface here. And one of the things they did was put in a trench down there towards the south. It's actually in the lower left part of this image where they saw really strong mineralization. Okay, so let's go to the next slide and I'll talk more about that. They put together a really nice cross section. It's a bit, kind of have to get a magnifying glass out to look at it, but this is basically a trench from west to east looking at the north wall of the trench. And it shows you they found some really nice Gossan. Gossan is basically oxidized sulfide. It's iron oxides and stuff left after waters have oxidized sulfur or sulfides. All right, and they found multiple Gossans in this, which are probably leakage coming off of something at depth. But notice they also got a grab sample there in that one on the left-hand side, nearly 600 gram per ton silver, 46.76% zinc, and also strong lead. I think it's like 4,000 and change ppm lead. That's gram per ton or 0.43% lead. That's great. Okay. Next year, now they have a target they can drill underneath there. Okay. So I think if they drill in that general area underneath there, they might find that extension of Water Pump Creek. That's why this is called Water Pump Creek South, by the way. All right. So let's really encouraged by this data, and I hope the company gets a second shot to drill some more holes next year. Let's go to the next slide. Okay, Altamira has put together a pretty thorough model of their Cajueiro project down in Brazil. This is, in my view, a reduced intrusive type system, kind of porphyry-like too, but it's a gold porphyry. And they have a really clear picture now of what is driving, now that they know there's kind of these intrusions that are sticking up, kind of like the upside down cow again. They're focused like a laser on identifying new targets. They've done soils across the whole area now because they know there's probably more of these things out there, and they're starting to see these things pop up in multiple locations. And this is the most recent one they've discovered. This is about 3.2 kilometers southeast of Maria Bonita, and it's this Espiro target. It's a new target. All right, now, do they have a lot of assays? No, not yet, but they have some very good indication this could be a nice new porphyry target to add to their collection that needs to be tested. Go to the next slide. Now, notice from this image, look at Espiro. It's right there over here on the left-hand side, directly underneath some alluvial workings. All right, that's a good sign. There's a porphyry basically coming up underneath those and is kicking off gold. All right, so that's where they did some work. They found, oh my gosh, there's porphyry immediately underneath this. Looks like a no-brainer target to me. Go to the next slide. And here's what they found. They found rock pieces poking up through, mainly from the alluvial workings, but poking up through the surface of porphyry with nice quartz veining. You remember the sheeted veining and stuff? They're basically seeing that kind of veining, sheeted, stockwork, whatever. They're seeing that kind of veining in the intrusive rocks here. Very distinctive, very diagnostic of these types of gold systems. Okay, here we have another drill target for the company. So they're starting to queue them up. We've got a whole bunch of drill targets lining up. And that's what it takes to kind of put together ounces in a camp like this. Let's go to the next slide. Newfound had quite a bit of news over the past 2 weeks or so since we did our last video. They did some met work. They got some great met results back. I'll talk about those. They also found a discovery at depth, which is really an extension, a deep extension of the Golden Dome zone. And then they also found gold, get this, high-grade gold up in, guess where? The ground they picked up from Lab Gold. Okay, they've actually come in and drilled and seem to have found the high grade. All right, let's go to the next slide. All right, first of all, this met data that they put out is just killer. I mean, it shows exceptional gravity recovery. Look at that. Look at the numbers right there in the middle column there. Gravity concentrate extraction. We're seeing certainly over 50% recovery, often 60s and 70% even 84% gravity gold recovery. That's awesome. Gravity, cheap recovery makes things economic. This is a wonderful first start. But with the CIL extraction, that's carbon and leach extraction, they add to that. Get great recovery. So in aggregate, over here on the right, you can see the overall extraction into the upper 90s. Quite frankly, 90.1 is the lowest, but most of these are up in the upper 90s. That is phenomenal. That's the kind of recovery they see at Fosterville, for example, in the high grade there. I think this is a wonderful, wonderful outcome. It's good technical work that needed to be done, and now we have good data from multiple deposits. It's the kind of data you need to gather to really start doing your deeper technical level work, in terms of getting that project in the direction of economic study and hopefully towards development. All right, let's go to the next slide. Okay, these two images are actually showing the location of that high grade intercept. And notice on the top one up there, we're looking to the kind of the northwest here, but notice underneath Golden Dome, which is towards the right end of that long section, there is that hole that hit that 300 gram assay, that 2.15 meters of whatever it was, 340 grams, I think it was. And notice that it's down plunge. It's below the Golden Dome zone. And I think a lot of the targeting here has actually been derived from the 3D seismic work they did. So good on them. They're now demonstrating the high grade does extend to depth. That is very high grade stuff. That's basically 11 ounce rock or something like that. I mean, that's incredible. And it's quite a ways down plunge from the Golden Dome. All right. And then over here on the right, you can see it a little bit more focused picture of this. Now we're looking towards the north or northeast, and you can see where that high grade occurs. Again, down dip, down plunge from that Golden Dome target. All right. So high grade at depth. They're starting to see, utilize this deep seismic work that they did to help them better target high grade extensions at depth. Wonderful outcome. Go to the next slide. And then up here, so on the left-hand side, up at the ground they picked up from Lab Gold, which is quite a ways northeast of Lotto and Jackpot and so forth that they've been drilling for a long time here. You can see basically everything down there in that scrunched down in the lower left-hand corner is kind of their traditional stomping ground. Okay, but now they've started to step out into that ground they acquired from Lab Gold, and now they're moving up into this area like this Pistachio Discovery. Where they're hitting high grade. Okay. And one of the things they did that I noted right away is, that's interesting. They turned the drill around and drilled the opposite direction. So you can see right on the right-hand side where the word pistachio is, you got two drill holes going to the northwest, which is the traditional angle that the guys drill when they're down on their own, traditional ground. They've done that, use that same approach up here, and voila, first pass, they got some really nice high grade, including 105 gram per ton over 2.1 meters. Kudos to them. Maybe this is a brand new discovery that's going to add to the story. All right, go to the next slide. We're getting there, I promise. Okay, Puma put out news this week. Very interesting. I love the story. I think that the gold belt here, it has a lot of similarities to the Newfound story. It's in New Brunswick, so it's a bit further to the south from Newfoundland, but the geology is actually very similar. It's quartz veins, high grade quartz veins, a lot of VG. We'll call it epizonal orogenic gold type veins, and they've managed to attract Kinross in on this project. So Kinross now has a right to earn 65% interest by spending $16.75 million. And I think this is a fantastic result. Means the company can save all the dilution they were incurring or have been, would have to incur if they had to raise this money themselves. And they can let Kinross do the heavy lifting for the next few years. So you can see the commitment year by year by year. That's a great outcome. I think Kinross has a technical team too that can help Puma do this. Now, that said, Puma is going to be doing a lot of the work. So they also get management fees for overseeing this program. Okay, so basically Kinross is going, here's money, Here's a few of our technical people, but you guys, you do the work. And guess what? Puma gets paid a management fee. So I think this is a good outcome, especially in light of the current market. I think this is a good way to advance this very prospective project. All right, go to the next slide. Is that it? I think that's it. I guess I'm having to wrap it up too. Wow, I don't get to do this too often. Maybe I can make stuff up. I don't know. That's what happens when you leave the geologist to finish. Look, for all you who stuck with us through the video, please contact Merrick Iwahashi, who is our head of investor relations. Merrick, real nice kid. Think the world of Merrick. He can line you up with some information about Crescat if you want to learn more about our fund, our goals, investing in mining and other things. And I think I think a lot of you folks might want to take advantage of what's coming in the gold space over the next few years. I think we have a strong thesis and we're starting to see it play out. Thank you very much.